Smart money concepts, or SMC, is more than just a way to trade. It's a whole way of understanding how markets move. This method is known for being really accurate and ahead of the curve, mixing different tried and tested ways of trading. It includes new ideas like order blocks, mitigation blocks, and fair value gaps, which can make it seem a bit tough to grasp at first, especially if you're new to trading. But don't stress. In today's video, I'm going to show you an indicator-based strategy that will make it much easier for you to get the hang of SMC and use it to really boost your trading profits. And the best part, we'll be using two popular LuxAlgo indicators which are absolutely free to use, bringing the power of professional trading right to your screen without any cost. By the way, these tools work in all time frames and all markets that have sufficient level of liquidity. Those can be Forex, stocks, or crypto. I've personally put this strategy to the test on various assets, including the Euro USD, Ethereum, and even Tesla's stock prices. In this video, you'll receive a step-by-step guide on the indicators needed to create this highly profitable strategy. Following that, we'll outline the specific conditions and guidelines for executing successful long trades. Finally, we'll explore the rules and factors to consider when entering short trades with confidence. And most important, we will go through invalid entry signals, so make sure you watch the full video to understand how to use this highly accurate trading strategy. Alright, time to hit the ground running. Today, I'm going to share a really cool way to trade, and it's all about watching the price itself. We're going to use something called the fair value gap. This method is pretty straightforward. You buy when the price seems too low and sell when the price seems too high. It's like catching a good deal when shopping and selling it when its value goes up. To learn all about this strategy, let's open TradingView first, and let's start with a clean chart. This strategy works on several markets and time frames, and it can be used from 1 minute to 4 hours or even the daily chart. But as an example for this video, we will use the FTM USDT chart on different time frames. Now, before we dive in, a quick note. While we're exploring some powerful free indicators from LuxAlgo in today's video, their premium indicators offer even more features and insights for those looking to step up their trading game. Haven't heard of LuxAlgo yet? It's an all-in-one indicator with over 20 features designed to give traders useful signals and overlays. It's fully packed with tools for technical analysis. LuxAlgo is the top provider of technical indicators globally, trusted by over 50,000 traders. With the ultimate membership, you get advanced signals and overlays, estimates of institutional volume, and over 20 other premium features. These include highly rated indicators developed from community feedback, access to a Discord community with scanners and bots, real-time alerts, non-repainting signals, and much more. These indicators work on any market on TradingView, such as stocks, crypto, forex, futures, and commodities, and on all time frames. They're versatile, fitting any trading style like scalping, swing trading, or investing, and are great for uncovering technical insights. If you're serious about elevating your trading skills and building a career in this field, LuxAlgo offers 3 plans. The Essential plan includes the Price Action Concepts Toolkit. The Premium plan adds the Signals and Overlays Toolkit with built-in AI, plus the Oscillator Matrix Indicator and the Price Action Concepts Toolkit. I personally chose the Ultimate plan, which combines all 3 toolkits and 3 backtesting system strategy scripts. The strategy includes 2 indicators only. In order to add the first one, click on the Indicators tab and search for LuxAlgo Predictive Channels, and click this one to add it to your chart. The Predictive Channels indicator is a real-time estimate of a trend channel. This indicator shows us 2 resistance lines, which are those red lines right here. It shows us 2 support lines, which are these green-colored ones, and an average, which is this white line right here. The predictive channels attempt to find a real-time estimate of an underlying linear trend in the price. The return supports and resistances are constructed from this estimate. The area between the price and the white middle line is colored in to help us see what's happening. If it's green, the price is higher than the trend, which usually means prices are going up. If it's red, the price is lower than the trend, suggesting prices might be going down. When the price moves a lot away from the expected trend, we'll see new lines or channels form. We can think of it like setting boundaries. The factor setting decides how far the price can move from what we expect before we say it's doing something new. If we set this number higher, it allows more room for movement, so we won't see new channels too often. The slope setting changes how slanted the channels are. If we set this number lower, the channels tilt more, making it easier for the price to look like it's moving away from the expected trend. This means we might see new channels popping up more frequently. Now that we understand how this indicator works, let's add our second indicator to our chart. For the second indicator, we want to search for LuxAlgo Fair Value Gap and click this one to our chart. Fair value gaps are like special markers on our chart that show where the price might find support or face resistance. Imagine them as zones where the price takes a breather. A bullish fair value gap, where we might expect the price to start climbing, is shown as a blue box. On the other hand, a bearish fair value gap, indicating the price might start dropping, is marked with a purple box. These gaps represent price areas that haven't been touched for a while, creating an imbalance. Once the price reaches these gaps and fills them, it's like completing a puzzle piece. After that, we often see the price move in the opposite direction, correcting the imbalance. This method is a bit like going against the crowd. We watch for these blue and purple boxes, the fair value gaps. When we spot a blue one, it's a hint to consider buying because the price might go up. If it's a purple box, it might be a good time to think about selling, expecting the price to go down. Now onto the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably. And let's first start with the rules to enter a long trade. For a long entry signal to be valid, there must be two conditions met. First, we need to see two predictive channels heading in the same direction, which means the channels must be plotted with the same directional slope to confirm the trend direction. Once the next channel starts plotting, we want to see a blue imbalance box resting on the opposite side of our new channel. Second, we need to wait for the price to hit our blue box. If both conditions are met, we can enter a long trade. We place our stop loss below the lowest support line of our actual channel, and for the risk to reward ratio, we want to target 3 times the risk. Remember, a great strategy needs great tools. LuxAlgo premium indicators are a game changer. Using my link in the description gets you up to a 20% discount. Let me show you another example for a valid long entry signal. So let's check 2 easy steps. First, we need to see 2 predictive channels being plotted with the same directional slope. Once the next channel starts plotting, we must see a blue imbalance box being printed. Second, we need to wait for the price to hit our blue box. If these 2 criteria are met, it's our signal to consider a long position. We'll set our stop loss just beneath the lowest support line within our current channel to protect our trade. As for the profit target, we aim for a risk to reward ratio where the potential profit is 3 times what we're risking. For a short entry signal to be valid, 2 conditions must be met. First, we need to observe 2 predictive channels heading in the same downward direction, meaning the channels must be plotted with the same directional slope to confirm the trend direction. Once the next channel starts plotting, we want to see a purple imbalance box resting on the opposite side of our new channel. Second, we need to wait for the price to hit our purple box. If both conditions are met, we can enter a short trade. We place our stop loss above the highest resistance line of our actual channel, and for the risk to reward ratio, we aim to target 3 times the risk. Remember, a great strategy needs great tools. LuxAlgo premium indicators are a game changer. Using my link in the description gets you up to a 20% discount. Let me show you another example for a valid short entry signal. So let's check 2 straightforward steps. First, we need to see 2 predictive channels plotted with the same directional slope downward. Once the next channel starts plotting, we must see a purple imbalance box appearing. Second, we need to wait for the price to hit our purple box. If these 2 entry rules are met, it's our signal to consider a short position. We'll set our stop loss just above the highest resistance line within our current channel to safeguard our trade. As for the profit target, we aim for a risk to reward ratio where the potential reward is 3 times what we're risking. Now let's examine a scenario that might seem like a proper moment to enter a short trade, but it actually isn't a valid signal according to our strategy. Here we observe 2 predictive channels with the same downward slope, indicating a potential strong downtrend. This meets our first entry rule. However, even though the channel formation is correct, the price doesn't reach the purple imbalance box. Remember, the purple box is crucial for confirming our trade. Without the price touching the purple box, our second entry rule is not fulfilled. In such cases, patience is paramount. We strictly adhere to our strategy rules and refrain from entering the trade if not both entry rules are met. This discipline is essential to minimize risk and concentrate on setups with a higher probability of success. Ready to elevate your trading game? Dive into my top strategies for trading crypto, forex, and stocks by checking out this video right here. Don't miss out on leveling up your trades.